Join the Ungovernables. No filters, no apologies. This season, we're cracking open Uniswap governance. Welcome to a new episode of the Ungovernable Podcast.
And we're live. How we doing, guys? Welcome to a new episode of the Ungovernable Podcast. Today we have Callan Van Den Elst, DeFi Envoy at Wintermute and a leading voice in DAO governance. Callan, you've been instrumental in bridging the gap between TradFi and the Wild West that is crypto. You also lead Wintermute's governance arm, shaping governance strategies across protocols like Uniswap, Aave, Compound, Lido, among many others. We are Joe and Austin from Alpha Growth, your premier DeFi ops and growth firm. Callan, thank you for joining us. What else should everybody know about you?
Hey guys, thanks for having me. It's great to be here. I think you covered it pretty well. But yeah, I lead governance at Wintermute and kind of handle a lot of our public involvement across many DAOs.
Beautiful. We'll start at the beginning, man. How'd you get into crypto?
I think I feel like I have probably a very similar story to like many others. It started in 2017. I had a friend that kind of got involved at the very early stages, made quite a bit of money, got pretty interested from that, went through the whole 2017 kind of bull and bear market. And then I think 2020 when DeFi came around, I got like super interested in DeFi, continued to read all the white papers during that period and get like quite involved. And naturally, as DeFi progressed and we saw DAOs come alive, I began sort of participating in forums anonymously, and that's how I kind of transitioned from, just being someone who was, I guess, trading shitcoins to being a bit more involved in the industry and caring a bit more about like what DeFi actually means.
I think pretty similar story we've heard. That's classic, but it sounds like you've been around for quite a while, so that's great. Excited to hear some of your perspectives today. How would you say your traditional finance education has shaped how you approach DeFi and crypto markets?
Yeah, well, I mean, I wouldn't say I have traditional finance experience in the classical sense. Like, for example, I joined Wintermute straight out of university, but I would say, like, I guess most of how my decisions are made are kind of fundamentally coming from, the courses that I studied at university. I did 4 years of economics at an honors level with like a heavy focus on econometrics and like quant methods and microeconometrics. So these sort of subjects kind of really go deep into how people behave under incentives and kind of optimal ways to think about things and progress through different strategies. And I would say that's like where most of my experience and decision making would come from and how that is applied to DeFi. And I think honestly, like, I really didn't expect what I studied at university to have such a big translation to crypto, but fundamentally they are very, very similar, which is like awesome.
Yeah, and was there like a particular moment, when you were working like on the forums in the DAOs, that you really wanted to build your career around governance and kind of working with DAOs?
I think like ultimately for me, it was after spending a few years in crypto already and seeing DeFi come alive, I understood that I kind of really wanted to work in the crypto industry. And then when this role, I guess, at Wintermute popped up, it already had a lot of kind of requirements that I had done just through like personal experience, participating in forums. Like, for example, I kind of approached many DAOs to get certain collateral assets listed on these protocols, specifically something like Maker. And then I was also heavily involved in like providing feedback on supposedly like tokenomics or the way certain protocols handle, I guess, like their treasury and their like income from fees. So at that point, it was kind of like a natural progression when the role at Wintermute came up, because it was already things that I was kind of doing in my spare time as a hobby, which is like perfect.
Oh, that's awesome. And I guess what gets you most excited about like working with DAOs as well? I think sometimes people from the outside see all these long form posts and kind of see it as like daunting. And if you're doing this as like a hobby, would love to hear what you get most excited about.
I think like yeah, the one thing that really made me excited to kind of be working in the space is like despite being say a small token holder, if you can come up with an idea that is like clearly beneficial to a protocol or token holders, there's like a very good chance that this proposal could be implemented into like this DAO or protocol. So you can actually have a voice, you know, without having like a crazy amount of capital behind you. And I think that's something that's like truly powerful and something that's like really only enabled within like the DeFi and DAO ecosystem.
I 100% agree. I think it's in a perfect world, everything is meritocratic. And although we don't live in a perfect world, I think so far we've seen at least quite a few of the DAOs that are properly decentralized. I think they've enabled that, which has been very cool to see. That even like you said, a small voice that financially might not be very powerful in an ecosystem, if their voice is loud enough and they have good enough ideas, they can make something happen. And that doesn't really happen that way with governments in general. It's pretty black box. Okay, so DeFi Envoy. Am I saying that word right? Envoy? How do you say it?
Yeah, I say Envoy, but
Envoy.
yeah,
Okay.
I think it's fine.
Either way. Tell us a little bit about this role. What does it actually entail, and how does it, how might it differ from traditional positions at a firm?
Yeah, sure. So I guess like a bit of backstory. So originally, like before I joined Wintermute, as a liquidity provider in the DeFi space, Wintermute had to interact with the DAOs when they were dealing with public treasuries, when they were seeking out liquidity provision deals, right? And so these partnerships are very public, and you had to have someone in the forums kind of initiating these discussions so it could go through the correct methods. And funnily enough, this was originally handled by our CEO, Evgeny, who was in the forums. Like he was quite an avid forum reader, enjoyed it. And so, yeah, he was handling all these like communications between Wintermute and the DAOs. And like naturally, he was like, okay, maybe we should get, another person in here to kind of take over and expand this and do this at a bit more of a high level where he can like, continue to focus like, I guess, on the rest of Wintermute. And so like DeFi Envoy, the name kind of stems from that. And it's really just like a description of, Wintermute having a person that is able to interact very publicly with a lot of protocols that we deal with, a lot of DAOs that we deal with across DeFi. And I guess I wouldn't be able to give you a clear example of how this might differ from like traditional finance. I guess maybe in that sense, a lot of these deals are a lot more like backroom deals and there's a lot more private discussions. But in this sense, like everything is public. A lot of the times, as you've seen, token holders get to see the kind of terms that we offer to the DAO, the expectations from us, who we are, how long, the liquidity provider deal is going to last for, and what the strike prices are with these deals. So yeah, it's definitely like a lot more public than the traditional sense.
Yeah, which is of course a beautiful thing. There is one pretty significant downside to doing business in public. Obviously, accountability is increased by doing business in public. However, you cannot negotiate as good of a deal if you are negotiating in public, and we have learned that as DAO service providers, of course, where it's if there's a specific deal that you could consider to be alpha, as soon as you bring it to the public forums, it's no longer alpha, and then immediately you're shooting yourself in the foot. Okay,
100%.
You are down in Australia, correct?
Yeah, that's correct.
Okay, that's what I've noticed is the Australian time zone is one of the most difficult to have steady cadence of communication. What are the Web3 business hours for Callan? What is the Australian schedule if you work in crypto?
Yeah, it's definitely a bit of a roller coaster, I would say. I think like, being remote, like a key thing is to kind of really set yourself like working hours that you stick to. And so I try to work like a regular, let's say 9 till 6 every single day at home, I guess. And that is kind of like my day to day, but due to the time zone, I'm very often having calls late at night, from probably 8 to 10:30 p.m. To speak to Europe and London, and then the US time zone's not too bad to deal with. but sometimes there's also early morning calls involved. For example, when I had to do the Arbitrum long-term incentive committee, I think I had a few 5:30 a.m. calls, which was a bit rough. So yeah, some days can be like standard, some days can be very long. And, like as I start to wind down for the day, the team in London begins to wake up, and I start kind of responding to messages there as they come through. So yeah, it's a bit up and down, it's a bit all over the place, but I try to have some normality throughout the day.
It never ends. Yeah, I
Yeah.
don't know about you guys, but I would prefer the midnight call a couple times a week than I would get up and take a 5:30 call. I don't know.
I really do
100%.
5:30.
I've got nothing to give until at the earliest probably 8 o'clock.
It's funny how everybody's internal clock is just a little bit different. It's like I think for me, anything after like 7 p.m., my brain's working, but 5 a.m., 6 a.m., I'm ready to go. So Colin, how, I guess outside of kind of like work, what other non-crypto activities do you do to keep sane in the ecosystem, or just outside the ecosystem, really?
Yeah, sure. Like, nothing too exciting, to be honest, but I have a dog and a girlfriend that takes up a lot of my time, as you guys probably know. So that keeps me very busy, and I'm based in Sydney, so there's a lot of lovely beaches here, a lot of great food. So the weekends usually revolve around exploring, Sydney's beaches, eating good food, and gym, like hopefully every day if I can get around to it.
There we go. That's the way to do it. Is it what kind of, is it weightlifting or
Yeah.
Okay. All right. I love it.
I gotta say, I got to meet Austin in person not too long ago at ETH Denver, and of course I've seen a million of the shoulder up, but this dude is huge.
It's a unit. Hey.
Yes, he is a unit. He hides it well on the screen.
I love to hit golds, Jim. That's my daily thing.
That's awesome. There's actually a Gold's like 5 minutes from me, and it's pretty good.
Well, I gotta go check it out. It's the real Golds then, if it's in Sydney.
I didn't know that Golds was multi-hemisphere.
I didn't either.
That's cool. Okay, yeah. Callan, I want to dive in real quick to Wintermute. So you guys started out as a trading firm, and since you've built this governance arm, you spoke a little bit on that. But what was the main impetus to this expansion? Was this more of an investment? Was it more of a risk management tool, or was it genuinely a way to shape the ecosystem?
Yeah, I mean, I think it's kind of all of those points you touched on, I would say, is like ultimately, like, we're a crypto native trading firm, right? From the very beginning. And the decision to go full board and establish a bunch of delegate platforms largely comes from this crypto native stance, and the fact that we genuinely try to empower decentralization and advance like the decentralized world as much as possible. And that is kind of like our ethos and philosophy, I would say. Having a governance arm fits naturally within this, considering how many DAOs there are, the natural progression of protocols in terms of decentralization. And then on the business side, like having a governance arm, specifically 2 years ago as well, plays a really big factor in differentiating Wintermute from our competitors, because it adds like this quite strong value add for both our trading arm and our investment arm, which we can offer to our partners and portfolio companies, where we can directly get involved with the tokens we may hold and help them very early on in their decentralized kind of life. And one of the clearest examples of this has been like our very public involvement in DYDX from the early stages. We've created 12 plus proposals, created multiple on-chain payloads. We've improved liquidity provider rewards. We've helped them transition to V4. We helped spin up their operations sub-DAO, and we also continue to sit on their grant sub-DAO for more than 2 years now. So yeah, having this governance arm really, one, allows us to take an activist approach, but also really offer our partners and portfolio companies like a good strong value add that is quite important depending on where they are in their decentralized life cycle.
And is there anything that you kind of look for when you're choosing the DAOs that you're going to be working with?
Yeah, I would say like it's a little bit different now compared to when we started. So over 2 years ago, when we publicly created our delegate platforms, like the decision to select certain DAOs was both strategic and non-strategic. Strategic in the sense that, we had a vested interest as either an investor or a token holder. So it really made sense for us to get involved and use these tokens to actually like move the needle in terms of decentralization and provide feedback where we can, and just improve overall governance efficiency by trying to maintain 100% participation rate on votes. And then the non-strategic side back in the day was really like, okay, DAOs were still pretty nascent and there wasn't too many major DAOs. However, there were protocols that had DAOs, specifically blue chip protocols that kind of were the key pillars of DeFi at that stage. And so it really made sense for us to get involved, even though we had a non-vested interest in these protocols, but it was purely just to help out on the governance side and help try and improve decentralization for these protocols. So that was kind of like our decision, I guess, back in the day. It's changed a little bit now, as we have many delegate platforms and many other DAOs in the ecosystem. We unfortunately cannot be in all of them. So nowadays it is mostly strategic in the sense that we are either like an investor or a token holder, and we are there to help our portfolio companies really participate in DAOs, improve governance efficiency, provide feedback on proposals, and just have a high participation rate in voting.
Yeah, you guys definitely have done so. I've definitely seen from the outside. How would you say that the mandates of Wintermute guide these decisions and long-term value creation versus opportunism?
Yeah. So I mean, I think like the way we try to think about votes is like pretty simple and straightforward. Ultimately, if you want these things to progress in a sustainable and safe manner, specifically DAOs, their treasuries, like you need to be prioritizing proposals that over the long run add value, right? And you need to be voting against proposals that in the short run don't add much value, and in the long run don't add much value and carry very little second order effect. And so a clear example of this is when you have like these ridiculous liquidity mining incentive programs that are kind of just like, hey, let's chuck 10 mil at providing incentives to liquidity providers without any consideration of which pools should be selected, what are the estimated effects of how much incentives drive TVL and volume. So it's really just like proposals that are short-lived, short-term, carry no strong second order effects. We typically, vote against. And the second kind of philosophy we follow, which kind of backs up our voting decisions, is to try and take an objective and data-driven approach where possible and as much as possible. And this allows us to really kind of nail in the long-term kind of vision, and also allows us to identify like these short-term kind of ridiculous proposals that add very little value. And by doing it objectively, it's very easy to provide feedback to proposal authors that might not see where we're coming from. It just makes our job a little bit easier from that perspective.
So I know you guys definitely pride yourselves in being an active voice, being an active delegate on a lot of these different platforms. There is a lot of noise, and there are a lot of small fish with great ideas and big fish with bad ideas. But how do you decide when to step in and when to stay silent? Is there something you look for?
Yeah, I think like for us, the approach we take is like we don't want to be that person that like comments nonsense on every single post and proposal that comes into the forum. We're not there to be like, this is amazing, like this is great, and let's just regurgitate kind of what the proposal has stated and be like, yeah, we support it. Ultimately, like the way we approach it is like when we have a strong belief about something, we will come to the forum and state that belief. Or where we see we can actually provide value to the proposal and suggest edits or changes, we will come into the forum. Or if there's certain risk things we want to flag in terms of if we think it's going to be a waste of money to do something, or there's a asset being listed as collateral on like a lending market where there's a couple of red flags that we're not very happy with, we will raise this. So it really we're definitely in the background lurking, and we will come to the forum when we like truly think we can like actually add value to the conversation, because we don't see kind of the purpose in just adding more noise to what's already there, and diluting kind of the information that's already being passed on.
Oh yeah, for sure. I feel like that really helps, validate your voice as well, right? When you're posting something or making a comment, then people are going to start paying attention, if you're adding value when you do post, and not just a yes man to whatever the proposal was talking about. I,
Yeah,
to
100.
to oh, go ahead.
I was gonna say, yeah, 100%. And like maybe sometimes, we're not commenting on every forum post, but a lot of the times we are providing feedback privately, like through Telegram, where a lot of proposal authors will come seek feedback from us before going to the forum, and so that's also where we kind of provide some of our opinions.
I think
Yeah,
that there would, real quick on that note, I think there's something very valuable that is kind of sitting there right in front of us, which is this idea of a contribution score, which is something it's a little bit of like this psychological, sociological phenomenon where, let's say you're in a meeting with your team, and someone who never talks raises their hand and says something very articulate, and you're like, wow, it's kind of like this credit score in your mind. It might even be subconscious, but they just totally went up in the ranks. Like, next time this person raises their hand, I'm going to listen. Meanwhile, there's other people that we all know that, that are maybe on a group call, when they just talk and talk and talk and talk and talk, and then you zone out, and the next time they talk, you're not really going to pay attention to what they're saying. I think that these delegates, we have all of that data, right? You could basically index all of the likes and the responses the replies that people made to specific comments on discourse, the activity of a specific delegate, what percent of the votes that actually, let's say Wintermute votes yes on these 5 proposals and no on these 5 proposals, and what percent of the time did they actually vote the condition of the outcome of the proposal. All of these things could contribute algorithmically to the outcome. And I think that would be a really good way to really have people lean in to increase the quality of a delegation. I'm not sure if you guys have ever seen something like that. Just a thought.
Yeah, no, 100%. I definitely agree with that. And I think there actually are some teams that are working on something similar to this, using, LLMs to kind of pass all this data. But I will preface it by saying that, like, not all delegates are noise, in the sense that, they're constantly posting the forum. Like, there are some really high quality delegates that are very diligent in, replying to most proposals and actually providing like solid feedback. And, for proposal authors, sometimes it is nice to, even if it is quite a few people just saying like, hey, yeah, we support this, we think it's great, but don't really provide any like strong feedback to what they want to see changed. It's still nice for them to understand from a temp check stage, to gauge the community's kind of interest and how they're thinking about it. So yeah, I would say there's a good balance, and we definitely try to be on the spectrum of like only really commenting and providing feedback where like we feel necessary.
Yeah, and it's a great way to support those that are posting the proposal, and also for the community to kick off that discussion.
Yeah.
I think one tool that's been pretty interesting as well for Wintermute is WinterGov. So, Colin, what do we need to know about WinterGov, and what do you guys got cooking over there?
Yeah, I mean, so like WinterGov was born from like ultimately like some things that bugged me about the current space. So like I wrote it on June, simply just to make my life easier, because there was no like concrete place. Arguably you can probably say like Tally's pretty up there now, but there was no like place where you could go to and just like run kind of like a basic script and understand which proposals are live that you haven't voted for. Here's a link to them, go vote. How many votes have already been made? What's the quorum like? When's it going to end? And then also understanding like your voting participation for all of these DAOs that you kind of work in. So we have, your voting since inception, your participation rate there. You have your 6-month performance for voting participation. And then on top of that, you can also go see like who has delegated to you and what share of tokens have they delegated to you. So yeah, Wintergov was like really a tool to like make my life easier that, we thought we'd like throw into the public. So I still use it to this day. Every 2 days, I rerun the script on June to tell me which proposals are live that I haven't voted for. It really like helps keep the participation rate quite high. And yeah, it just keeps me, I guess, on my toes, making sure that I'm covering everything that I need to. So yeah, it's just like a great, very simple tool that we designed for that would be useful to other delegates.
Yeah, I'm sure that you are able to see some other insights. Is there anything interesting that you've noticed from the data as well? Maybe like inefficiencies or anything that might pop up on that Dune dashboard?
No, not nothing specific that stands out. I'd say like the main thing is like, kind of understanding where delegation comes from for other large delegates, and really like by doing that, you kind of realize that, including ourselves, like majority of your delegation comes from a couple of big actors, and that's why, getting a voice in DAOs is extremely hard, because you really need to find the whales essentially out there. Otherwise, it's extremely hard to get lots of small delegations from thousands of people and actually like kind of be heard within a DAO in some cases.
We were actually talking about that earlier. It's like who are you making decisions for, right? Because if you have like a state representative in the US, you're making decisions for the millions of people that live in your state. But for a delegate, probably you're right. It's like 1 or 3 whales that have delegated to you, and there's probably a lot of backroom conversation going on to where you're the proxy decision maker for them. So that's definitely cool to have that visibility for sure.
Yeah, I would say on that, like luckily, I would say some of our large like delegators we actually don't know, and we don't know who it is, and so like we don't have this kind of external pressure on us, which is like fantastic. They kind of just let us do our thing, and we're also fortunate to have like our VC arm, which certainly helps in certain situations to at least bootstrap our voting power, which has been amazing.
Yeah, that is nice. So on that note, as governance becomes more professionalized, how do you see the role of individual token holders versus institutions shaping up?
Yeah, I mean, like ultimately, I think it's like fair game, to be honest. I know there's been, a bit of backlash of like, institutions holding a crazy amount of, tokens and being able to kind of strong arm certain proposals. But at the end of the day, like these institutions have kind of made that investment and they have a vested interest. So I think it's like fair game, but I do think there is a extent to where it is detrimental to the health of like a DAO and governance, right? Because if you have an institution with a crazy amount of voting power that can pretty much control most votes, it's just like a recipe for voter apathy, and you're really going to have a DAO that is disinterested, because what's the point at the end of the day? Like if you put all your, time and hard work and votes towards proposals and, on-chain, off-chain votes, but like an institution comes along and just goes like, nope, sorry, don't want this to go through, like you're gonna feel pretty apathetic, and you're not gonna like want to participate in this DAO for much longer.
It's discouraging.
So yeah, it is. So I definitely think there's like a limit. But honestly, I wish, more institutions were more publicly involved. I think it's worse when an institution just votes on chain, blocking proposals or voting for proposals, but not really providing any rationale or connecting with the forum beforehand to kind of explain, where they're at and what they're thinking.
Do you see more institutional delegates emerging into the future?
Yes, 100%. And I think we're kind of already seeing more of that come alive. We're seeing more VC firms get in the mix. We're seeing more like companies get in the mix, using their treasuries. So I definitely think that, we'll continue to expand. And I think like, with the US like regulations being a bit more lenient now, and a bit more pro crypto, I definitely think we'll also see like more participation from US entities, which is going to be like really great. I just hope that, yeah, they're a bit more public about their involvements and provide a bit more feedback in the forums.
Aside from like institutions coming on more, do you see any other major evolutions coming in governance, whether this is like Uniswap or just DAOs in general?
Yeah, I think like ultimately we'll see more service providers fulfilling key functions to improve decentralization. We'll see more governance minimization. We'll see a continued greater influx of like very talented contributors, which have already improved over the past year and a half, which has been amazing. And then hopefully we will see stronger alignment between, delegates and the success of a protocol.
Okay. Do you see any like do you have any mental models on how like service providers might start working together, different contributors might start working together? So I feel like that's always a thing in DAOs where it's like, okay, how can we start working together and collaborating across these different aspects of the DAO?
Yeah, I mean, I wouldn't have like, I feel like in terms of a mental model, the current models like are pretty, I think, okay at the moment, because at the end of the day, you kind of just have like a service provider agreement with a clear mandate of what is expected and in return what the funding is. Or you have these working groups which have multiple service providers kind of working together on a clear mandate. I think like the hardest part is making sure there is a clear mandate and making sure there are deliverables and expectations, and then finding the right balance between what a service provider wants to get paid and what the DAO is willing to pay. And I think this will just continue over time, right? And I think the next kind of problem that comes with this is like ensuring that DAOs have sufficient capital to be funding these service providers over time. Yeah.
In an ideal world, what is a fully decentralized, perfectly efficient DAO look like to you?
Yeah, I mean, to me, I would say like explicit alignment between all stakeholders, or as much as possible. The protocol success is linked to the token. There's a DAO is self sufficient monetarily. Its governance minimized, and there are clear and simple short-term and long-term objectives that get refreshed after they've been achieved. I think we see some glimpses of this, across some DAOs. They don't have all these factors, but like to me, this is kind of like the perfect vision in my mind.
What's the best that you've ever seen? Most efficient DAO?
I don't know if there is one that clearly hits all the nails on the head. I would say like back in the day, and even still now, like Uniswap's governance minimization has been quite delightful compared to some DAOs, right? You're really only focused on a couple of key votes, which I think are great. And then on the other end of the spectrum, you have DAOs that have like crazy amounts of programs going on, crazy amounts of working groups going on. It's a lot of time and effort to stay on top of it. But some other shout outs to like Lido, I think they provide a very clear vision of what they want to achieve from their contributors and the DAO. And when they want to achieve this, this largely comes from Hasu's Goose Goals and Regoose, which I think is like really great. And then I also really like Sky and MakerDAO's vision for the future that Rune posted quite recently, where you kind of have, this DAO earning a bunch of revenue, and programmatically this revenue gets distributed through buckets over time to make sure that all their liabilities are covered. And then in the end, you have this cash that kind of goes back towards buyback and burns, paying delegates, paying token holders. And this is all enforced on chain through, key parameters and very heavily governance minimized, which I think is like awesome. So yeah, there's some DAOs doing like much better than others. There's some DAOs that have some really nice like features, and then there's some DAOs that are like it's pretty chaotic.
And I guess going back to Uniswap, with Uniswap Unleashed just passing, what are you most excited about in the proposal for what's going to be rolled out over the next 2 years?
And
Yeah,
just
I mean,
real quick, just in case anybody's listening and doesn't know what Uniswap Unleashed is, it is $125 million going to the Uniswap Foundation for various initiatives with Uniswap v4 and Unichain for the next 2 years. So pretty cool stuff. Pretty exciting. But yeah, I'd love to hear, Callan, what you're most excited about.
Yeah. I mean, personally, we're super supportive of it. Like, I think that the Uniswap Foundation this far has done quite a great job based on their prior budgets and prior objectives. And, they have faced like roadblocks and they do face challenges based on US regulations. So sometimes their hands are tied over very key and important topics and issues that they really like can't push without inviting major legal ramifications to the DAO, which is like completely understandable. But in terms of Uniswap Unleashed, super bullish. I think Unichain's design is great. I think Uniswap V4 I'm very bullish on. I think we transition from like a kind of simple AMM to something that is targeted towards more creators and developers that can like truly express crazy ideas and crazy pools through V4, which I think like is amazing. And ultimately, I think that's how Uniswap wins competitively in terms of market share, and improving that competitive advantage is really creating an environment where these hooks and V4 pools can attract as many developers as possible who have these crazy ideas about different market structures, different potential, creating different trading environments essentially for markets that might grow in the future, and even markets that currently exist now. And I think that's ultimately how Uniswap wins in the future, and the foundation through Uniswap Unleashed is kind of there to help guide this process. So yeah, super bullish on both V4, Unichain, and the foundation kind of fulfilling their role.
Okay, but have to know, what are you most concerned about? Obviously, there's a lot of exciting stuff, a lot of opportunity here. But what are you most concerned about with Uniswap Unleashed?
I think like ultimately it's a very large budget, right? And funding is not kind of based on deliverables. However, there are KPIs set, but like funds are essentially released from the get-go, and so there is little protection mechanisms for the DAO in case certain milestones have kind of broken down or not achieved, which is definitely one concern. And there are like aspects of this proposal that we did have concerns about, that we spoke with the foundation about, and they were very clear and great at describing like why they think it's valuable to the ecosystem. Like we had some concerns about the $4 million in funding or $3 million in funding to kind of research papers, and other aspects where we think sort of like funding and budget could be wasted. But I think like holistically, it's somewhat reasonable, it's well-rounded, and it focuses on very clear objectives and key areas that they want to improve. So yeah, I would say like, we had minor concerns, but overall, like, we're pretty happy with the proposal.
When it comes to the proposal, is there a priority between UniV4 or Unichain, or do you think they're to be treated equally?
No, I think they're very different landscapes and dynamics, right? Like one, you have a chain that is offers high programmability, offers different market structures. You're focusing more on the ecosystem as a whole, different apps that are not related to Uniswap. And so the way you approach that is very different to something like Uniswap V4, which has like a clear surface area of certain things you can incentivize, what is actually beneficial to the DAO, what will ultimately drive more volume, greater market share, more fees to token holders. So, on one hand, Unichain, you kind of just want to grow this massive ecosystem with a lot of activity that drives revenue to the sequencer, and therefore, once the validator network is up, token holders. And then in Uniswap V4, you're really just fighting for market share, ensuring Uniswap remains like the top dog and captures as much volume as possible.
So in terms of resource allocation, do you think it should be about 50-50, or do you think that one should be a little bit more heavily weighted?
I think if I had to choose, I would have to think about it more, but like my first thoughts are like you probably want to go like 60-40 in terms of Uniswap V4 being a larger percentage of the budget. And this is simply because you have less of a value leak here, and that most of the money spent on Uni V4, like assuming there's a fee switch, will ultimately lead back directly to token holders. When Unichain, you're kind of, if you're throwing incentives to launch for other protocols to launch in your chain, right? There's only so much value you can recoup from that. And I know like a percentage of chain activity will also go back to token holders, but I think there's greater chance of value leaking by incentivizing certain things in Unichain versus just incentivizing V4.
Yeah, and then there's also the argument, I guess, that Unichain itself is more of a commodity competition, right? It's a blockchain. There are lots of blockchains. There's lots of block space. However, UniV4 is arguably a proprietary novel use case that I think now is the time to really pour gas on that fire while it's lit, because we'll always be able to compete with the other chains, and we'll always be able to compete for valuable block space. But I think we have to strike while the iron is hot, so to say, on V4. So I definitely agree. I might even put it more like 75-25.
Yeah.
Okay, in terms of taking a little bit of a step back, instead of a forward look here on V4 and Unichain, do you still see it valuable to have V3 deployments and more of what's been going on in the DAO and some of these other previous things, or should we really halt all efforts there and just really focus on the future?
I think it's still valuable and important. And this is purely because V4 is still in its infancy, right? And you now have this kind of issue where you have all these different hooks, which ultimately just makes it harder for, aggregators and searchers to integrate with and drive volume to, where V3 is tested infrastructure that's been around for a long time. It's a lot more simple. It's a lot easier to spin up a router on, to kind of, trade across various pools. So I definitely think there's still value in deploying V3, considering deployment costs are rather low. You don't necessarily need to have an incentive package for V3 deployments. So yeah, I definitely think, given it's still early stages of V4, V3 is still valuable and should be deployed where it makes sense.
On that note, a little double click into there, especially considering the mandate of Wintermute, do you believe that liquidity fragmentation is a net positive or negative to the ecosystem at large?
It's a bit tough. Like ultimately, liquidity fragmentation just caters to different users and traders on chain, right? It's like if you have $1,000 spread over 100 pools, it's going to be very hard for large traders, institutional traders, high net worth individuals to come in and kind of trade against these pools, because you're just going to suffer massive slippage at the end of the day, which is not a great trading environment. As opposed to when you have a couple of pools that have like a really, really strong amount of liquidity, it makes trading like a lot better in the sense. So liquidity fragmentation, I do think is like a valid concern and a valid issue, to be honest, but you're ultimately just catering to the different types of traders on the chain. And, I think as, cross-chain intents get better, solving gets better, RFQ gets better, it does alleviate some of these concerns to an extent.
So now going back to these V3 deployments, you guys were at Wintermute as a delegate. You guys were one of the first to comment on the most recent co-incentive proposal, which is Saga, and I think so. You guys were against Uniswap putting anything towards that deployment. Is there a place we should draw the line? Something that's a little bit more of like a qualitative or quantitative line that we could draw in the sand to say, if the opportunity meets these parameters, these criteria, then they do deserve co-incentives, or is it just strictly kind of just a feeling? Is it subjective? What do you think?
I think it's a bit of both, right? Like most of these proposals fall into two buckets. It's either a well-established chain with a lot of TVL, good network activity, great place for Uniswap to deploy and actually spend incentives. So the decision there is quite easy. Then you just decide how much Uniswap actually wants to invest in this chain, and that will come from you understanding the data, seeing what competitors are doing on the chain, like DEX competitors, and truly understanding how much value is actually there to capture for Uniswap. Then the other bucket is it's a relatively new chain or a chain that hasn't succeeded that much. in terms of a new chain, right? Like the DAO is ultimately taking a bet on if they deploy incentives here. And usually you kind of just weigh up, like you look at the statistics and you can see that there's really not much activity here. It's in most cases, it's actually it's a lot safer to first deploy V3 there, see how activity kind of picks up. If activity starts picking up and it's good, then you bring in the discussions about incentives. Like I don't think a V3 deployment and incentives need to be done on every single proposal. But there are like edge cases, which is quite subjective. And it's like, there could be a brand new chain, right, that has an absolutely exceptional team, which has been proven over, a decent amount of time. They have a lot of capital behind them, a lot of great investors. Their tech is great. They have a vision of how they plan to bootstrap DeFi and DeFi activity. Then in this case, it might make sense to consider deploying incentives there, despite maybe a very, very like high lack of activity. And this is ultimately just the DAO betting on Uniswap taking a good portion of the market share and assuming the chain is going to be successful. So yeah, it varies, but it's definitely a lot easier when you have an established chain that comes to the DAO for funding.
One perspective that I have heard that's, I would say, not contrarian but more adjacent to what you're saying is that these specific chains that are very novel, the opportunity is that Uniswap can basically position itself as the flagship DEX on this chain. Whether or not the chain itself hits a home run and becomes $1 billion chain, it's more of having Uniswap everywhere, like the 7-Eleven of the world, right? It is the convenience store that everybody thinks about. And if we start to go really, really risk off, then on some of these smaller ones, people are going to come in and eat the brand's lunch, so to say. And then if we start to consolidate and really only ever launch on the best of the best, then it'll be a little bit more of a competitive landscape. So I think that is the only potential straw man that I've ever heard for that perspective. But I don't think there's a right or wrong answer. I definitely see where you're. I definitely agree that there's one way to objectively retain value, and that is wait and see how the organic traffic builds up. So definitely can appreciate that.
And I think that's like a very like fair perspective. And, and sometimes we do think about that, but like, I think it's also like there's other considerations, right? Like more often than not, Uniswap carries a very strong brand with, tried and tested code that has never had an exploit, right? And so like naturally, if you launch that on a chain, there's some value premium attached to this, and LPs are probably going to be, more inclined to provide liquidity in Uniswap V3 or V2, knowing this versus maybe a new protocol that has been a fork with changes and like less audits and token incentives.
Definitely, there's something to be said there. Okay, in regard to protocol-owned liquidity, one of the hot topics next to the fee switch, do you think that Uniswap should build its own liquidity using POL?
100%. I think it's a fantastic idea. This is something I'm very pro for, and something I would like to see, but I don't know. I'm undecided on the mechanism as which this happens. Ultimately, I wish it came from a byproduct of the fee switch, which is built up over time. I think it is like probably one of the best things Uniswap can do with fees and potentially their treasury. Because at the end of the day, right, Uniswap's market share increases proportional or somewhat proportional to the TVL that these pools have. As you can provide thicker liquidity, provides better quotes, more people want to trade against your pool, more fees, more volume. And on the other hand, like on top of this, you have protocol and liquidity that is now like non-elastic in the sense that it's not going to disappear without a DAO vote or a working group kind of managing this. So you don't have to rely on exogenous liquidity or exogenous liquidity providers to kind of stay in these pools for a long time. As soon as they leave, like there's going to be a material drop in your TVL and the pool is going to become less competitive. So I think it's like, yeah, one of the best use cases if there is excess capital within the DAO to begin bootstrapping protocol and liquidity, especially for V4. I think V4 is like even more fun, right? Because then you can begin to help out like, very cool, interesting V4 hooks that might drive a lot of market share to the protocol. And on top of that, you then begin to like earn fees and continue to grow the treasury. So I think it's like a fantastic kind of idea and something that I would love to see implemented.
I wanted to double click there. What do you think the rollout strategy might look like for the fee switch? You talked about like V4 and how that can, ride on top of that with a fee switch, but would love to hear your input there.
Yeah, look, we don't have a strong opinion on this. Like, we are not the experts when it comes to this. I'd rather leave it to like, the gauntlets of the world that already kind of deal with this stuff, or other, risk service providers that can model this stuff out. And I think there's like always going to be a trade-off, right? Like LPs lose in this situation, but then maybe stakeholders and token holders and delegates win. So there's like this clear trade-off. I think also like when you compare it to Uniswap Labs' front end, right? They're just adding an extra fee on top of this kind of trading fee. So it doesn't actually affect liquidity providers, but it affects end users and traders on the platform. But ultimately, these traders are kind of unaware of this to an extent, or they don't mind paying, higher fees because they just enjoy using the Uniswap app, UI, wallets. So there's definitely like different trade-offs. But yeah, I mean, in terms of like actual rollout, I don't have a strong opinion here. Like at the end of the day, TVL is likely going to go down. You're going to lose some people. There's going to definitely be a level of attrition, but like it's probably worth it if it means there's a lot more like alignment between token holders, stakeholders, and delegates with the protocol.
Yeah, do you have a take on like the balance between like the consumers, LPs, and the DAO, and how to maintain that? Because you don't want to go too heavy on one side or the other to lose too many folks and lose too much market share. Just love to hear your thoughts on that.
Yeah, I think it's tough because you actually don't really know what's going to happen until you kind of put it into practice. And I mean, if you look at competitors, right, there's a lot of competing dexes that have fee switches enabled, and there's already LPs not earning, the same amount of money as they would be earning in Uniswap, but like maybe there are token incentives which kind of compensate for this. In terms of like, yeah, Uniswap, I think it's difficult. Like people are going to lose. You don't really know how much you can charge in terms of fees to LPs and traders. But I think that's where V4 is like super interesting because you can experiment with this. You can have, volatility kind of aware fees where maybe the DAO takes a bit more of a cut when there's a lot of volatility and people are willing to pay more. And you put it on the traders instead of maybe the LPs. Which I think is like very interesting. And there's a crazy design space with V4 that I think can be very cool and interesting to see.
I'm glad you touched on that. That was actually going to be something that I jumped in here and asked, is that in standard economic models, typically the tax is passed down to the consumer, not the supplier, right? So in the same, if we're talking about liquidity as a commodity, you would think that the same thing should ring true. And so if there's a fee at the protocol level that returns to the DAO, even if it's just a couple bips or more, whatever, we'll see. And that can always increase slowly. But then in these V4 experiments that we could run, you could try the same exact ETH USDC pool, one of which the liquidity providers are earning the standard amount, and then in the other one, the liquidity providers are earning less. And then, in the first one, the actual fees would be coming from the consumers themselves, which are the traders. And it would be interesting to see the net economic benefit of the two models. So that is definitely one use case of V4 that's going to be really neat.
Yeah, 100%. And I think it's a bit harder than like traditional models, like in the real world, where you compare it to consumers and suppliers, because I think like one of the hard parts about this is like you have these DEX aggregators and these solvers, right, which will ultimately route to the most efficient pool, depending on gas, slippage, and fees, right? So like even if you decide to put the burden on the consumer and not the supplier, it could be more harmful to the overall volume of your pool versus like just making LPs kind of cop the fee in the end, or cop a reduction in the fee in the end. So yeah, that's like definitely like, I think aggregators definitely play like a large role in volume and something the DAO needs to consider.
And one thing too is, look, I can't speak for everybody, but I can definitely speak for myself and say that hypothetically speaking, any transaction that I've ever done on chain has been basically rooted in FUD or FOMO. And in neither one of those cases do I care whatsoever how much it costs to execute the transaction, right? And so unless you're a professional trader that is doing this for a living, I don't know that the average consumer is going to be dissuaded by any of these trivial fee switches. But all that to say, I'm excited to see what happens for sure.
100%. Yeah,
okay.
Looking forward to it.
Callan, looking into the future here as Uniswap evolves, we have some very exciting things on the horizon. What do you think Uniswap governance needs? What are the holes in the game?
I don't know. I think it's in a decent place at the moment. I'd say, like, honestly, like the main thing, like I personally think should exist is way better alignment between paid delegates in general, and token holders, and the success of the protocol, which is like, obviously, this is a topic of discussion that's been going on forever. And it's something that honestly has probably been hurting the DAO to some extent and causing some apathy to some extent. So I think, if there's a way in which, the DAO can eventually become self-sufficient monetarily in terms of fees, use these fees to kind of go towards protocol and liquidity, build up like a stable treasury, and then use excess fees from this to then once again, begin rewarding these token holders, these stakeholders, these delegates. I think Uniswap will become a lot stronger once these things are in place. But I think, like, overall right now, it's in a pretty decent place in terms of, it's highly governance minimized. You have a couple of core working groups that are handling some key functions that are valuable to the DAO with kind of out any issues. And you have like somewhat of a delegate incentive program that currently runs, even though I have some views on that, but I think it's in a decent spot.
All right, Callan, wanted to ask one question. So let's say you were delegated 41 million Uni tokens and you had total control over the treasury. What would you do?
Oh, I don't know if I would control the treasury. I'd probably just control the fee switch, to be honest. Like, look, like Uniswap has a massive treasury. It honestly like has a very large runway. I'd much prefer to see a treasury grow through a fee switch than have to sell off a bunch of Uniswap tokens on the open market. That's kind of like where I sit, to be honest. Like, yeah, I think it's a lot healthier, much better for the DAO if, we begin building like yield-bearing stable coins, maybe some alt assets, maybe some protocol and liquidity, and some funding for delegates and token holders through a fee switch, then selling off Uni.
Yeah, definitely padding the balance sheet and helping out the treasury to be able to do more.
Give us some alpha before we wrap here. What's an underhyped project that you're excited about?
No, like, I guess personally, Euler Finance has been on a tear recently. Their TVL has increased a crazy amount. I'm interested to kind of see how they end up standing up towards the likes of RV and Morpho, and seeing like how long this growth is like sustained. But I think the team have like done a great job at, I guess, coming back from what would have been a very tough time, and relaunching Euler and attracting TVL with the token that is like pretty much fully divested. So yeah, I think like keen to see how they go.
Where can people best follow your work, Callan?
Sure. Probably on Twitter and Wintermute socials. I write a weekly governance digest that is posted both on Twitter and towards our institutional counterparties, I would say, which covers kind of major proposals for the week. It's not a lot of proposals, but it covers, like, I would say, the proposals that are very important to certain DAOs and the votes for these DAOs as well. And so they're just key summary and highlights. Very quick to read, has a graph about certain stats. So if you want to get your dose of, I guess, governance, head over to Twitter and you can find the stuff there. But other than that, yeah, just follow Wintermute socials. You can follow me on Twitter. I don't post too often. But yeah, that's where most of the alpha comes from our side.
Okay. Beautiful. Well, Callan, really, really appreciate it. That's going to wrap up another episode of the Ungovernable Podcast. Callan, thanks for all your perspectives here. This was a really fun conversation. For our
problems.
listeners, please don't forget to subscribe on Spotify and YouTube. We drop a new episode every week, and follow us on X at Grow Uniswap to stay up to date. That was the Ungovernable Podcast. We are Joe and Austin from Alpha Growth. See everybody next week. Thanks, Callan.
See you guys. Thank you guys.
This was the Ungovernable Podcast by Alpha Growth. Watch all our episodes on YouTube or Spotify or weekly live on X.